Evening monks, evening falcons. I'm glad to see that we're all still in here, smashing it. Less than a week to go of monk month. There's definitely a lot of things that I'll be looking to carry on into next month. So, of course, I won't be exercising so intensely every single day, but regular exercise is definitely something I'll be looking to carry on in my life forever. Eating the right nutrition, stopping these sugars, refraining from the refined sugars, definitely something that I would look to be implementing further on in my life, as well as I am seeing changes in my body. I did take a before picture at the start of the month. At the end of the month, I will be taking the after picture, so I'm really excited to see the difference there. A few more things that I will be implementing into my day-to-day life routine is just being more intentional. I feel like since having the processes of the ice bath, the breath work, and the drinking the lemon water, these were things that these are things that I did anyway, but now I've been doing them more intentionally. I can feel the needle starting to move, and this is what brings me on to another subject about moving the needle. This is something that I kind of struggled to get my head around to start with, but as monk month has gone on, I've realised what moving the needle is, and moving the needle is everything that we're being told on a weekly, a daily, a monthly basis. It's things like doing the SMB, watching it how many times, and implementing the lessons that are being taught to us. You know, if Mark, Ibi or Abdu is telling us to do something, it's for a good reason why they're telling us to do it. So what I like to do is give myself a 48-hour window to get whatever they've told me to do, to get it done. So I think this constitutes to moving towards being a good listener, and we know all the top profitable traders within the community are good listeners. They are being told what to do, and if you can look through all the podcasts that Mark has done, and there's a lot of similar traits between these traders who are succeeding, and all we have to do is follow in the footsteps of successful traders, and they've given us the steps that we need to take. So all in all, just keep moving the needle, guys. Keep doing your forecasting every day. Keep doing your ASR, deep ASR weekly, tuning into the webinars, being intentional. And when we watch the SMB, don't just skip to pairs that you've got on watch. Watch the whole of the SMB and watch it multiple times, because that's what it's there for. This is why the content is being recorded. This is why it's on the dashboard for us to utilize. I mean, even if you're not a plus member and you don't have Rewired, there's still so much content for you to digest. It would be rude not to. Like I say, if you haven't got Rewired, you should be prioritizing to get Rewired, but you can use the first 10-15 minutes of the SMB and the Q&A of the SMB to help formulate. There are hints of Rewired in there every single week. So if you can watch them intentionally, take the notes, listen to the questions, what people are asking, because a lot of the time they're questions that you might have yourself. So I just wanted to start off by saying how we need to be more intentional with how we are moving the needle. So the monk mode challenges that we've been doing every week and every day, for me, I've felt a new level of intensity, a new level of intention, and I can feel myself getting that 1% better every single day. Obviously, I'm not a robot, and I'm not just chart work all day, every single day. That's not what they're telling us to do, because, you know, I've got a family too. So I am juggling family life. I go to work, I'm studying, I'm attending the webinars, and just not rushing it, just trusting in the process, not just saying that you're process driven, actually being process driven. So having enough experience, enough experience of the knowledge. And this is why we say to go over things over and over and over. When you come back to things in a new unit at a time, say 4 weeks ago you watched the mechanics, there's been 4 SMBs since then, there's been a monthly live webinar, and there's been a midweek market review. And just to add on top, you've got the Monday lessons, you've got IBI's performance webinars. This is all you gaining the experience of the knowledge. There's over 15-20 years collectively from the coaches of experience. So it goes back to the point of being a good listener. Take in what they're saying. Give yourself a 48-hour window to complete what they're saying. Obviously, you don't have to go away and do it straight away and cancel all your plans for the rest of the day just to, do what's being told. But it should be within your best interest to be doing it within the 48-hour period. I can't stress this enough. And this is when I started implementing this. This is when I started seeing more results within myself. Not so much on the trading aspects like profits, but more results as in me getting better as a person every day. And this is just as a side effect, the profits are going to come, and I know it. So as you can see, I'm just chilling with Batman for the time being. Let's dig into the SMB for this week. I've really enjoyed putting this one together. So here we go. DXY. We zoom out. We go to the daily. All right. This is bullish. We've had the long wick through this low. We've got a long wick coming through. So there is every opportunity we could be coming back up to reach this and make this a double top. So if we was going to sell off, this is the sort of price action that we would have been seeing, and we would have wanted this candle on the 4 hour to be more of a bearish close, but we did end on a wick. So this shows me that we might not be ready to sell off just yet, and we do have the inverse head and shoulders forming at this low. So it wouldn't be surprising to me if we break this high. If we break this high, form the continuation, and start seeing these moves to the highs, and this is going to position us nicely again on these dollar cross pairs. So if I just go to the 1 hour, the only thing that throws me off a little bit is this. This is not the sort of price action we would be seeing if we was going to go long. From the high time frame, it looks great for us to be going long, but we are trading this. This is squeezing, and for me, price action could do this, could just repeat this same behavior, and we could be getting that bit of sideways price action where not much is happening. So we could carry on towards the lows, which would position us again nicely. So whichever way we go, we can position ourselves the way we want to. So another way that we could be seeing this is we've got this high. Yeah, it's above this low, but the high is there. So if we was to tap into this high, this is when I was talking about I want to see a break above that high. If we're going to go long, that's what I want to be seeing. But what we could be doing here is we could be just correcting, tapping into this high, and then if we form the continuation here, this is when we could start to go short and continue our move down, and this would position us nicely across all the pairs. So I'll just be sitting on my hands. I'll be waiting for price to show its hand at the end of the day, not rushing any positions by a long shot. So patience is the key here, guys, and this is what I'll be waiting for. I will just be patient. So that brings me on to EU, higher time frame. See, we can already see what's happening, right? We have tapped into the low, yes, but we're not moving. If we're looking to take longs to these highs, we're not moving preferably how we would want to be moving. But what we can see is we've had a big wick here towards this high, so we'll be looking for price to fill that, to fill the high. So if I just drop down to the lower time frame, so if I go to the 4 hour, with price filling this high, this would make sense with the DXY trickling a bit lower. So DXY going lower, euro dollar is going higher just naturally. And if we do reach that high, which is highly likely, just to fill these gaps, fill the fact that we've wicked to the high on the higher time frame, we'll start coming up. This might take a while during the week, but we know how quickly the markets can move. So we do beat the high. I'll be looking for the insurance entry all day to be able to come short. We can get the tight stop loss, 10 pip stop, not unusual for euro dollar. To the first low, we'll have 8%, around 8%. And then all the way back to the lows, we're talking 18% worth of space. So I'm not saying that we're going to catch all the 18%, but this is a lot of room to be playing with. So we've got some good opportunity on the cards. On the other hand, if we are going to sell off from here, going back, see how we got this head and shoulders on euro dollar, and then on the DXY we've got the inverse head and shoulders. So it just goes to show how similar price action, how they do move together. So what we do have here, we have the head and shoulders. There's no doubt about it, that's clear as day. We do have this high here. We do have this high. Yeah. So if we are going to sell off, I want to be looking for price to break down back below that high. So if we break down here, start forming the continuation, this will be highly likely to drop out and reach the lows. And I just want to measure up a bit of risk to reward of what we could be seeing here. See, for this short-term move, we're talking 9.5%. You know, it's not to be snuffed at. And we'll be trading below all of that. We'll have all this room to move. So I'll just be waiting for price to show its hand before I start making any rash judgments and start jumping into the markets. You know, I've had a lot of times where I am jumping into the markets and I'm trying to take positions like this, and you know, times like these is where we just need to be patient, guys, and wait. So I'll be quite happy to be waiting there. So this leads us on to pound dollar as a hedge. So overall, if the DXY is going up to reach them highs, pound dollar naturally is going to come down and reach the lows. And then conveniently, we have the near miss. Now I have watched the little video that Mark put out earlier, but it was very briefly and it was early in the morning. So I wanted to just keep this as raw as possible. These were my own thoughts. I invite anyone to ask any sort of questions, whether they're psychological or technical, because if you guys are asking questions, this is going to help me further cement my ideas behind my analysis. So I would really like it if people are asking questions, and I do thank anyone who's tuning in to these breakdowns that I'm doing. So, clear as day, near miss, area of value, another area of value. We've wicked through, didn't sell off, but what have we done here? So we've wicked through, we didn't sell off, we have had full price action on the 1 hour. Now I can see this 1, 2, 3, right? So we have had the 1, 2, 3 into the high, DXY moving higher it makes sense. So we have had a little gap here, so this could be filled, and quite soon as well. So if we start tapping into this and then we start selling off once the DXY has reached the high, once the DXY has given us an idea of what it wants to do, we can position ourselves nicely, and this gap down here is a very good indicator that we are going to fill it. So again, 10 pip stop wouldn't be unusual on this pair, even if we got the reduced risk entry and we got a, let's say a 15 pip stop just to be conservative. So we've got the 15% stop, 15 pip stop to the low, we've got 12%. So this is a lot of risk to reward that we will be playing with. So I'll be looking to short that if we get the insurance entry, and that's only if. Just want to zoom out and have another look. Yeah, so you can see that we're in this as a whole. This lines up here, so we'll tap down here, which is what I'll be looking for, and then I will be looking for the longs, which will be absolutely stunning. So again, it's just a case of waiting for price to show its hand, and which I'm pretty confident that it will do very quickly. Pound yen. Right, overall we've expanded. We are in this area of value where we have sold off aggressively. What is this from? 2015, so just like 9 years ago, and price is still doing the same things. This is, you know, the data's there. You can see that price has been moving the way it is, the way we're being taught, and it has done for a number of years. So if we zoom into the expanding, still on the daily, we are at the line in the sand. This is the line in the sand, really. We've broken above the high. We've had the 3 touch. So that was my bedtime timer. So we can see it's going to be another late night in the lab because I've been out with the family all day. But anyway, daily, Friday's candle. We have the high test. It is a bullish high test. The bearish high test is always better. It always gives us a clearer view of what we want to be seeing next. But just because it's bullish doesn't mean that we can't sell off from here. So I'll be quite happy to wait for price action to show. So I'll be neutral on this because we can see from the higher time frame, this is a lot of momentum. We do have the high above, but the high is very far away. We're talking 500 pips away, so it's irrelevant at the moment, but we can just bear it in mind when we're wondering why price is moving bullish. And across a few JPY pairs, we are looking bullish. We know they tend to move together, so it's going to be interesting to see when we get these moves. So okay, higher time frame momentum on the weekly. Daily bullish high test, so this shows we could sell off from here. We have clear rules that we want to be following, you know, for when we are seeing the sell off. So for the sell off, this is what I want to be seeing. I want to be seeing price move down bearishly and have a strong close. We see something like that, we're going to be coming to the downside, and this is when we can start to look to fill this low and fill this low, and we know we can get good stops on this pair, so the risk to reward will be there. So let's just measure it up. We break back below this high, strong bodied candle, form continuation, so let's say pound yen, 20 pip stop, 20 pip stop, more than enough. This is what we can get, 10% to the first low, and then we're looking at all of that. So we've got a lot of space here, and again, it's just a case of waiting for price to just show us. Break back below this high, just follow the rules, stick to the plan, and the results are going to start to come. So for the longs, we can see I am staying neutral on this pair, by the way, but for the longs we can see we've made the footprint, we've created a footprint. So if we start seeing price form this on the 1 hour, I'll look for the insurance entry around here to get long. The reason why I'll be looking for the insurance entry is because how strong we've been on the daily and the higher time frame, is how strong we've been moving to the upside. I mean, if we was going to sell off, this would have been the ideal area to sell off, but we did carry on moving higher. So now it's just a case of waiting to see what we're going to be shown. So if we form the 3 touch there, above all, we've cleared all these highs. And the reason why I'll be looking for the insurance entry is because we have this sharp bit of price action just underneath. So for the longs, I'll be looking for insurance entry, 3 touch flag, let's go. Okay. So that's pound yen. Euro pound. So last week we were looking for sells from this first point because these highs were very far away. Didn't commit to the sell-off, which is fine. Again, I was talking in my midweek market review about any trades within here. I think a lot of people took some losses, unnecessary losses within this squeeze, and it's just Falcon basics, mechanics 101. This is a squeeze, wait for the insurance entry, and we didn't get the insurance entry. So that was it. There was no trade to take for myself. I think a couple of years ago I would have been trying to trade that and get in with the sells, rushing it, panicking, but now I'm a different man and I've learned new things. And again, it goes back to the experience of the knowledge. We're gaining the experience every week through watching the content. So just keep watching it and it will click. So here, it's not so much the longs which I'm looking for. I like this because we are so close to this high and this high. So really, this area as a whole is an area where we can sell off from. So if we make these highs, I'll be looking for price to sell from here, or if we go even further, I'll be looking for price to sell. And we know, again, there's ample risk to reward to be getting in with these pairs. So if we see anything like that, clear break back in, we start to see the continuation below the high after we've triggered mass psychology. 20 pip stop wouldn't be unusual. To the first low we'll have 3%, easily managed. To the previous high we'll have 7%. And if we do see this sort of price action, it's likely we are going to start to drop out and look for these, start being able to get in with these sells that we've been looking for across the yen pairs as a whole. So interesting week coming up on the yen pairs for sure. Pound Aussie, let's zoom out. So tap into this high, we've formed the structure, squeeze structure, we've had the bullish price action, we negated that a day later with the full bearish daily retrace. So we couldn't be seeing these moves from here, can be seeing these move from here to here now, and then we can be seeing the move to fill these lows. We got the gap towards this low on the higher time frame, and when we see price action coming up like this, there's a good chance we can see the same sort of momentum for the move down. So that's what I'll be looking for. I'll be looking to get in with the shorts here. So we can see we've broken out this structure as a whole, but we've squeezed, and now we're kind of forming this V-shaped squeeze. Usually V-shapes are quite sharp, so I wouldn't call this a V-shape. This is just a squeeze, and then we've broken out of the squeeze correctively back into the start of the squeeze, which is where we can look for the cells. We are still in proportion from the high to low. We're yet to reach the 50% mark, so that's nice. So if I just zoom in a little bit more, it's not so much this price action here that I'm too bothered about, because you could draw it on like that, could draw it on like that, could draw it on however. There's too many ways to draw it on, so I'm not bothered about the way it is, the 1, 2, 3s or anything like that. But you can see the drives, 1, 2, we break above 3. So what I'll be looking for price action to do is the following: drop down to the 15. I'll be looking for price to tap into the start of that squeeze, and before I've said it, you can guess it. I'll be looking for the insurance entry. Fill these gaps to the lows. We've been squeezing here, we squeezed into the high. This is a great area to be looking for the cells after this large move down to fill the bottom of this structure. So if we just look at the risk to reward profiling here, there's a lot of gap to be playing with, a lot of room. Say 12 pip stop, pound Aussie, not a stranger to this pair. There's been lots of beautiful, lucrative trades on this pair. 11%. So the proof is there. The idea, the trade idea is phenomenal. I'm really happy with this setup. It's one of my favourite setups, in all honesty. So if we tap into the high and get the insurance entry, we're good to go, and I'll be taking that with my eyes closed. Aussie. Now onto the next pair, Aussie yen. Beautiful, absolutely beautiful. So this is one of the pairs where we could be looking for the sells early on next week, which will be nice. We've got our area of value. We've got another little area of value, which is probably more accurate actually. So if I just line that up there, we tapped into it, tried to sell off, was very, very corrective with a sell off. So we can tell this wasn't going to be the move that we wanted. We've started making our way back into the high. We're creating a double top. We got the 1, 2, and now we're making that third touch, which is lovely. Let me just see how the daily closed. Again, we've got that bullish high test on the daily, right? This is not to say that this is not going to sell off because it's bullish. So if you're thinking that we can't sell off from here because we've closed on a daily bull wick, then you're wrong. Sorry, but you're wrong. Obviously, there's every chance that we can go higher from here, you know, because we have got the highs above, but it's too far away, and we've wicked. We wicked on the daily on Thursday. We've filled the wick, and now we've wicked again. 2 bullish high tests in an area of value. These are rejections. So if I go down to the 4 hour so we can see how. Yeah. So I'm looking for the shorts here. Unless we break above form continuation, of course longs. But we can see we've squeezed and squeezed. And when we have the suppressed volatility, it usually leads to increased volatility. So if I go down to the 1 hour, we can see that squeeze a bit better. So I'll be looking for price to break out, show us the momentum before we start looking to execute. And then if we get the continuation, we get the risk entry within the flag, 13 pip stop, all the way to this low, 21%. So we've got more than enough room to be playing with. The structure's there. You can see on a larger degree as well, we've had the 1, 2, 3 to complete the structure. When the structure's in the middle of the last leg, this is this is a good indication that we are going to be selling off from the highs, from this high exactly. So it'll be very good to watch what's going to happen next week. Honestly, there's quite a few good pairs. So that's my top 6, guys. Yeah, I have been filtering. Me and Mike have done a good mastermind session Friday night. We met up this morning for a coffee and went over a bit of chart work, a bit more. I highly, highly, highly recommend that you form a mastermind alliance. It's going to help with clarity. It's going to help with accountability. You two are 3, 4, how many there are of you. Try and keep it tight, but you will be pushing each other. And I know that when I meet Mike on a weekly basis, and if I've talked about something which I'm going to do this week, I'm going to damn right make sure that I've done it, just so I can go to him. Not just so I can go to him and tell him, because obviously in the end it's all for myself. This is how I'm going to grow. But I want to know that by the end of the week I'm not going to go to him and say that I have not done what I said I was going to do, because it's embarrassing, and you should be embarrassed. If you keep saying stuff that you're going to do, then you need to do it and not keep flaking in and out of this, because it's just not going to last. Aussie dollar, right? I know Mark had this top on his watch list, but for me, before I watched Mark's analysis, I didn't have it on at all, to be honest, because I couldn't see the value in it. But after a few of Mark's pointers, I did add it in. So I did want to keep this as raw as possible. In the future, I'm going to do my Sunday market breakdown before I watch the SMB. It's just I got a little bit excited this morning, and I did want to watch it in the end. So I did add this in. So I'm not going to go too much into detail on this one because I want to wait for the Monday live webinar. But we do have higher time frame, bullish, tweezer bottoms, nothing bearish about it. We did have a bit of bullish price action, but we've ended on a wick. How did we end on the wick? We do have the wicks. We got 1, 2, 3, 4, but they're not any rejecting off anywhere significantly. If we had these wicks here, different story. We'll be looking for the sells again, but this is just a stall. So we've broken above this high, these highs. We did form this, then that. So we weren't ready to be selling off from here, but we have had a sort of expanding play here, and then we have the hook point here too. So you can see the expanding. I'll be looking for price to tap in before we get the insurance entry, which will make sense with the DXY selling off. And that's all. I'm just going to keep it out there for now because I know there's more lessons for me to be learning on this pair for next week. So really excited to wait and learn. So fantastic. CAD we just clear it off. Okay, so we've had the highs, double top, smaller double top. We got this 1, 2, 3 drives, third drive into the double top, right? We have ended on indecision, long leg doji each way. So this can be seen as rejection, or I see it as indecision, okay? So if we drop down to the lower time frame, again, we got the daily. We can see this squeezing at this high. Good signs for the sell-off. This body has retraced 50% of the previous body. We've had 2 wicks above, so We are still in the sell territory, but we are coming to the line in the sand. So let's just draw this on accurately. I was seeing this as section 1, section 2, section 3. We've broke back below the override. We've got the expanding structure. So if I go to the 1 hour, we did end on this wick. This would have been lovely if price closed full-bodied, but we didn't. So what we do is we move on. We've broken below all them lows. We've had another mini double top within. So you've got double top within a double top. That's quite a good confluence to me, is when you get the pattern with inside the pattern, and then you get the pattern inside the pattern again. So really nice. It's just price action now. It's not really looking the best. But what I want to be seeing is price to continue with another leg down. So if I see price break below these lows and then we form the continuation, we have got enough risk to reward from what I remember to get in with the sales to the low. But we have to break it convincingly. So CAD yen is a great pair all day anyway. So to the bottom of the structure, we're looking at, you know, a mere 5%, but if we do see this price action, the probability of us hitting the bottom of this structure is very high, and that's when we start making these moves. We form a larger 1 to 4 hour continuation. We got loads of room to be playing with. So that's why I kept this as a wild card this week, because price is a little bit unclear, but again, the market's going to show its hand very quickly, and this is when we need to be on point and on the ball. Kiwi yen. So I put Aussie yen in my top 6 because it's going to be, I'm looking at it as being ready sooner. We've tapped into the highs and we are looking like we're going to see the sell-off. But Kiwi yen is showing us a different kind of picture. We're not going to be selling off yet by the looks of it. We've had the squeeze into the high. We've had some bullish price action. We've broken out of the highs quite bullish. So I say quite bullish. We've bullishly broken out of the highs and we're aiming for the higher value area. This is where we've got to think, where are the big players looking to get in? Where are the big players looking to get out? You know, they're looking to get out at the highest value areas, and this is what we're approaching. So for me, I'll be looking for the longs on this pair. So unless we break all the way back in and start to form our continuations, this is when price action will be showing its hand. But for now, we're driving towards these highs, so there's no reason why we can't look to get in. So we've got the footprint. We are trickling back into these lows. So if I just go to the lower time frame, we will have that squeeze into the low. I'll be looking for the insurance entry here. The reason why is because we could drop out at any time, and overall we have been trading within a squeeze for quite some time now. So we're just consolidating all of this squeeze. But if we do get that insurance entry, it's highly likely for us to be seeing the longs and filling the highs. So that's something that I'll be looking for. So on to pound Kiwi. Lovely pair. Lovely, lovely, lovely. We know pound Kiwi and pound Aussie move quite similar together too. So we have had the gap to the high, but it's not something that I'm going to take too much notice of right now because we've broke back below that wick. It's been quite corrective. We have the failed continuation here. This is a failed continuation because if we was going long, we'd have been going up and filling these highs, but we didn't. we had the continuation form and we've broken below it. So this is a good sign. We're going to be looking for sells to fill this low here. So if I go down a time frame, I'm not so much bothered about this week. It is close and we can tap into it, but this is not going to be the be all or end all of my trade, because this wick is above this low. So it's kind of not in the picture at the moment. So I'm more interested in this hook point, because you can see that this ain't the sharpest of hooks, but this is sharp, and this is where the liquidity is going to be. So if we get this structure into it, obviously I'm aware of that high, so here I will be waiting for the insurance entry. But if we just reject from here and see the insurance entry, I'll be looking to take that too. So what do we have here? We also have this low here. So that's a lot of space. This is the range that we're looking to play. Okay, so GN, say 15 pip stop. We've got 9% of the low. And if we're going to carry on all the way down to these lows, so we've got more than enough room to be playing with. Insurance entries all around today for the following week, so I'm really looking forward to the week ahead. Euro pound. Okay, see, I think Euro pound's beautiful. So overall, what we've done, I'm going to paint the picture as a whole. Area of interest, 1, 2, 3, sell off, sharp pullback, sold off again, continuation, and then just consolidation. We've consolidated through these lows. If we was going to see the longs, we would have seen price show the longs, but we're not seeing it at the moment. So it's highly likely that we are going to fill this gap to the low. So how can we capitalize on that? So now we have the expanding. We know that expanding patterns can act both as continuations and reversals. When they're in the right area, this is when we can be looking for the reversal. So I'll be looking for price to drop out, fill the gap, fill the third touch of the expanding. So if we do that again, drop out, and then we start seeing price action forming that above this low, we can look to start getting long. Finally, this pair's been taken a long, it's been a slow bleed of this pair. So 10 pip stop, not unusual. Could even get in with the reduced risk entry. To the high of the expanding, you got 7%, beautiful. And that's not, we're not just going to stop there. If we're going to get the turnaround at this low, move the structure into the low, we've got enormous risk to reward to be playing for. So I'm quite interested to see what's going to happen. This, again, like I said, this could be a slow bleeder and this could take a while to form, but I'm happy to wait. And then last but not least is the NAS 100. Okay, so indices last week, I had a missed position on silver, the commodity, and then indice wise, I had the Germany 30, which I was looking for the sells, and then we've just gone parabolic and we are in complete no man's land at the moment on the Germany 30. So there I'll just be waiting for price to show its hand. But here, again, we are in uncharted territory. We are in the all-time highs. We have been squeezing. But I just want to zoom into this pair quickly. I do like the look of it overall. Of course, it holds more risk because it is in this uncharted territory. But we can see we form a structure. We're expanding, we've created the double top, and then how did we close on Friday? We close with this bearish high test through the wick. See now, if this structure was here, we'd be looking to sell that all day long. But now, because we are in this uncharted territory, we do need a bit more confidence. But this, beautiful, exactly what we want to be seeing if we want to be looking for the sells. Okay, so we created the double top. So we got the expansion. This is the middle section. We've had the nice strong middle section. We've had a nice strong middle section just here. And then what happened? We formed the double top, had a big doji, long legs each way, indecision. And then we've had this bearish price action to fill the lower leg of this doji. So that's a good indication to me, which has thus formed the high test. So it's a good indication to me that price is going to sell off finally. And just to add a little bit of cherry on top, we have expanded into the double top. Beautiful. 1 hour. We're starting to see price move aggressive. We are trading back below this high, which is good. So confluences so far expanding. We've double topped. We've got the daily bearish high test. We've got the expanding into the double top, and now we're trading below the previous high. So this looks good. So I'll be looking for a bit more price action to show us where we're going to sell off before looking for the continuation. So let's just size up any kind of pip size we're going to be seeing. So we'll get the, let's say 18 pip stop. First low in our eyes, nearly 30%. So there's so much room we can be playing with here. And then to the lower the structure, we've got 4. See, I'm not even going to go into it. But you can see that the opportunity is there, and it is there to be capitalised on. And I think out of the indices this week, this is looking the best, purely from that daily. Such a good daily candle. I'm so happy to see that. So I'll be keeping that as a wild card. And yeah, this is my Sunday market breakdown, my second one. Saturday the 24th of February. It's 5 to 9 at night. I've still got a couple more goals to tick off. So like I said, it's going to be a late night in the lab for myself tonight. Keeping the energy high. Gonna go into tomorrow, smash out my Sunday, spend some time with some family and prepare for the new week and wind down. So if you did watch all of this, fair play to you, I thank you. I invite everyone to ask me questions. Please ask me questions. I'll be really happy to answer any questions that anyone might have. And like I say, I just want to get those thought processes ticking over. So have a great rest of your weekend, guys. On to the next one. Day 25 of Monk Month tomorrow. Not long left yet. So let's go. Thank you.